Hello, welcome to Truth Behind the Showcases, your global fashion retail and supply chain podcast. Today, Thursday, May 21st. Marks & Spencer post record sales, but a cyber attack carves into fashion margins. VF Corp ends 3 years of decline with a surprise quarter. Oil crosses $100 and a polyester cost wave is building. Plus, the resale economy just printed a number that traditional retail cannot ignore. I'm Sedat Sezer, breaking down the news and insights you need to start your day. Let's get started. Let's start with M&S, Marks & Spencer, because their fiscal year 26 numbers tell two completely different stories depending on which line you are reading. Group sales hit £17.37 billion, up 24.8% on the year. Strong headline. But adjusted pre-tax profit fell nearly 24%. And buried in that line is £131 million in cost from a cyber attack. The attack didn't just disrupt IT, it disrupted the stock pipeline. Fashion, home and beauty revenue dropped 7.7%. Because inventory availability and sales processes were both compromised. The second half recovered, and Marks & Spencer enters fiscal year 27 with a clean balance sheet and a new automated distribution center in the works. But the message for this industry is clear. Supply chain resilience now has to include digital infrastructures. It's not only about where you manufacture or how you route freight, it's about where your systems stay operational when someone targets them. Which connects directly to a different kind of resilience story, one that took 3 years to arrive. VF Corp, Vans, The North Face and Timberland just posted its first full-year revenue growth since fiscal year 23. $9.6 billion, up 1%, modest in the surface. But this is a company that spent 3 years unwinding operational distress. Operating margins expanded 280 basis points to 6%. Strip out the deckeys and the underlying growth rate is 4%. The North Face grew 12% in the first quarter, Timberland up 8%. The direction has reversed. From where I sit, the more interesting signal is when this recovery is happening. Oil above $100, an active US-Iran conflict, consumer sentiment under pressure across multiple markets, and VF Corp is still growing. That tells you something about the demand durability of outdoor and performance categories. These aren't impulse purchases. Brand loyalty in this tier weathers macro turbulence better than fast fashion exposure does. Now here's where it gets interesting, because while VF Corp is selling more product, a parallel economy is quietly absorbing a massive share of fashion spending. Vinted just disclosed that sellers on its platform earned €10.8 billion in last year 2025. That is not Vinted's revenue. That is what individual people earned reselling clothes through the platform in a single year. When a number that size flows through a peer-to-peer channel, it's no longer a niche, it's a competition. It shapes consumer pricing expectations. It changes how brands think about product longevity and first purchase willingness to pay. The brands that are moving fastest on circular and resale models are doing it for sustainability optics. They are doing it because the economics are pointing there. Which connects directly to the raw material picture. It's a signal worth flagging early. Oil crosses $100 a barrel in late April, up more than 30% year over year, driven by the US-Iran conflict. The full polyester feedstock chain runs upstream from the crude. PTA, MEG, naphtha, all under cost pressures. In India's yarn market, prices for polyester, polyester cotton, and viscose are already moving up. The rupee-dollar spread is giving Indian exporters some FX caution, but the underlying cost structure is tightening. For sourcing team with synthetic heavy supplier contracts in Asia, if those contracts don't have cost pass-through provisions, the landed cost conversation for Q3 and Q4 starts soon. Don't wait for the formal price increase notice. Feedstocks cost tell you where fabric prices are heading 6 to 8 weeks before the invoice arrives. And on the sourcing geography side, two signals from the Mediterranean basin that are worth reading together. The nearshoring case is being made again, this time with Hormuz as the trigger. Turkey's apparel export body points to a clear value premium. EU destined apparel exports average 20.7 euros per kilogram, well above the overall average. For fast reaction, premium EU orders, the nearshoring math holds. But I'll be direct. This narrative resurfaces every time there's a disruption. Ukraine, COVID, Red Sea, now Hormuz. The window opens. The structural commitments from European buyers rarely follows at the same speed. The question isn't whether they want nearshoring, it's whether they'll restructure their cost models and payment terms to actually do it. The counter signal is in the footwear data. Turkey's share of global footwear export fell to 0.55% in 2025, a 5-year low. Exports down 13.2%. Imports up nearly 3 times since 2021. The sector flipped from net exporter to net importer. Meanwhile, Vietnam's footwear export grew 58.8% last year, reaching $37.2 billion as China's share declined. That is supply chain migration happening in real time. For price-competitive, high-volume commodity footwear, the allocation decisions have already been made. One more before we close. Shoe Zone, a UK value footwear chain, closed 14 stores this year in £5 million in losses, and simultaneously launched on TikTok Shop, targeting Gen Z with school shoes and everyday footwear through creator partnership. The store as a discovery mechanism is declining. What's disappearing is the browse and buy high street experience for low concentration products. Social commerce isn't a supplement to retail anymore. It's the primary discovery layer for a growing segment of consumers. The question for Shoe Zone and for every retailer making this move is whether the conversation economy could replace what the closed stores used to generate. The main question I want to leave you with today is, as raw material costs build from the oil side, resales absorbs a growing share of consumer spend, and social commerce reshapes how products get discovered. Where does your sourcing and retail strategy actually need to be repositioned for second half of this year? That's all for today's analysis. To make sure you never miss the insights behind the numbers, hit subscribe wherever you get your podcast. I'm Sedat Sezer. Thanks for tuning in. I'll see you tomorrow, and until then, stay ahead of the curve.